And Bitcoin did have, it did kind of come back a little bit. So we have a good shot tomorrow. In fact, if Bitcoin can just get above, this level right here, I would take another trade on IBIT. I'm looking to trade IBIT, over and over and over because I'm looking for this cycle. I want to see this turn. I want to see this do this and take out the top. I do like IBIT. I'm just waiting. I got a little bit in. I already took 50%. Now I'm looking to close that trade out and put another one on up to the upside. So I'm sticking to what I see. I'm sticking to what I know. Dip my toe a little bit into the earnings play. But I think what you're going to see based on the fact that we are not going to be lowering interest rates, we're going to be hawkish, right? And that's dovish and hawkish. You guys understand what it is? So hawkish is when the Fed's policy is more towards fighting inflation and stricter monetary policy to restrict spending. And so typically when that happens, the dollar goes higher. Here, I can show you. So hawkish, when they talk about hawkish, for the Fed being hawkish, it advocates for higher interest rates so that inflation will come down. Because if interest rates are higher, people will be less inclined to get a mortgage, buy a new car, borrow money. And if they're not doing that, then that could help bring down inflation, right? Slowing, even if it's going to slow economic growth, they prioritize price stability. That is Powell, Mr. Hawk, and he's proud of it. Dovish favors lower interest rates to stimulate economic growth and reduce unemployment, even if it means potentially higher inflation. So this is more of a Trumpian philosophy, is let's stimulate the economy. If we can stimulate the economy and companies do better, and hire more people, wages rise, we will fight inflation. We'll bring in $1/3 trillion in tariff money. We'll have a strong labor force with wages going up, and we'll keep interest rates low so more people can buy homes, more people can borrow money to start businesses, and build our economy. So that's what the dovish position is. So when Powell says, I'm going to wait and see we still don't know what the effects of tariffs will be on inflation. And for now, we're going to hold the interest rate. We're not going to lower. That's hawkish. That's a hawkish policy. And so we look for what can happen. Well, a lot of things could happen. But one of the things that happened that we started to see leading up to the Powell decision was the dollar going higher, because they know that he's hawkish. So the dollar goes higher, gold, silver, copper go down, and oil goes up. So because we know this, and you and I have been studying the market internals, that's why we bought silver puts. That's why we bought FCX puts short term. That's why we bought longer term oil calls. Do you guys get it? I'm not just randomly picking stocks. I'm moving us into tickers that we can trade that have a setup, because I can't use the basic technical setups that I love to use. If a stock is in compression, it pulls back to the 21, and then retest that level, stacked moving averages, out of compression, blah, blah, blah. Because most stocks are either under their 50 and the 200 is above them, or they're high flyers like NVIDIA and AMD where I can't touch them. It's because it's a manipulated market. So in a manipulated market, somebody asked me this the other day. Why? I think it was, who was it? JK or JC? If you're in the room, I think you're the one that asked me that. Are you in the room? just so I can call you out in a friendly manner. And so, this is why. And also, just to toot the masterclass, we're going on 5 years of me yapping. And I don't yap the same thing week after week because the markets change and I learn things. And why do I want to learn things about the markets? So that makes me a better trader, so I can make more money trading. And then I share that with you. That's what Masterclass is. It's an ever growing, ongoing price action mastery. I try to master every aspect of trading that I can and then share it with you. And the reason why I'm always striving to find different angles and ways to trade effectively is because that's what I do. I'm a trader. Sometimes you guys forget. Sometimes I forget, but because I get really, wrapped up in running this company and building the company and coming out with new things and promotions and sales and customer service and all the things that you have to do to run a business. But please don't forget the number one core principle of Trade With Me Now. And it's the first word, trade. I am a trader first. I trade every day and I love it. And I've gotten pretty good at it. Not because, and I'm not like, it's not like I'm an expert trader. I've gotten really good at being disciplined, a technical pattern reader. I'm really good at reading technical patterns now, as Zlatko has said. I understand the market internals better than most people. And I use this to put on better trades with setups. And I share that with you. And that is what the masterclass is. So that's where these trades came from. Now, dovish, if he ever turned around and said, all right, well, we're going to probably lower rates by 50 basis points in September. Yay, that's what we thought. That's going to stimulate growth. I think Powell really doesn't believe in the tariff scenario. And I think he still sees little points of inflation, pockets of it here and there. And this is just my opinion. And I think he thinks if he lowers the rates like Trump wants him to, and inflation pops, and at the same time, the tariff money pushes inflation even higher, and then the markets collapse from that, guess who gets blamed? Powell. He will get blamed for it. And because he doesn't want to get blamed for this, and he thinks that the tariff thing may not work out and really shoot things up, and inflation is still around, and lowering interest rates is just going to stimulate this whole house of cards, I'm not doing it. I believe that's what part of his thinking is. Did you guys know that the two other Fed chairmen, Bowman and what's the other one? I forget. They dissented. They disagreed with Powell. They said we should do a rate cut, and we should do one now, and probably in September as well. Did you guys hear this? No, not Bernanke. Bowman and holy crap, what's wrong with me? Waller. Thank you. Yeah. The two of them. It's the first time in 32 years there's been a double dissent. First time in 32 years, double dissent inside the Fed. And so Powell should really go to bed tonight thinking, you know what, maybe I got to relax my policy and just let the chips go where they, a double dissent is what they called it, right? Anyway, do you guys have a little better understanding what happens here? So here's what can happen. So when there's a hawkish policy, which it sounds like he was, the dollar should continue going higher. If the dollar goes higher, oil will go higher. Silver and metals should take a little bit, further move. downward. And what you might see yields coming down. Not the short end of the curve, but the 10 and the 30s might come down over the next couple of weeks. Maybe. And if that happens, we'll switch to TLT calls, especially if it gets over like 88 or 89. I'm getting the 90 calls, probably for September, maybe end of August. But as of right now, I was thinking yields were going to continue higher. I thought maybe he'd talk about bringing the dollar down, adjust monetary policy, bring this down, and call for a rate cut. Initially, if he called for a rate cut, the short end of the bond yields would probably come down, but the higher end, the 10-year, would probably go up. And if that happened, then the TLT puts that we got would work. So because of the initial reaction that we got today, if you saw, still kind of moved a bit higher. They didn't go lower the way I thought they would have. That's why I decided to double down on TLT puts. And like I said, if TLT moves higher towards 90, I'll close them out and I'll switch to calls, especially if I see the 10-year and the 30-year start to pull back. And not only that, we could also switch to GDX calls, right? I mean, see this move here? Right? So this is like around, here's 2 o'clock. Here's where the decision was made. And unusually, which is weird, the 10-year went up. So when I saw the 10-year go up, I said, all right, listen, I'll play that game. So I bought more TLT puts. It really should have gone the other way, but it didn't. So I'm playing what the market is showing me here, not, going to screw around with narrative. Now, if, like I said, if this starts to rotate down, if it does actually, I don't see how it would, but if it does, make a move like this further to the downside, then I'll probably, and this goes down, I probably will buy more, maybe some GDX puts, and I'll go another week with it. But if it's going to do this, if yields are going to go, higher, and the dollar starts to pull back, then guess what we do? GDX calls. You could do silver too. That'll be my move. So just remember this, easy, right? Dollar down, yields down equals GDX or SLV calls. Dollar up, yields up. If that, happens, then more SLV puts, GDX puts, and we'll switch to TLT calls. Okay.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.